Welcome everyone to our webinar. This is Tim Messier with Medalist Diversified REIT located in Richmond, Virginia. We are a public REIT and we trade on NASDAQ under MDRR. We went public in December of 2018. We're here today to discuss our updates on where we were since the last webinar was filmed. And with that, slide 2 are the disclaimers, and you can look at that slide at your leisure. But let's go to the investment highlights of our company. First of all, we paid a quarterly dividend since going public in 2018. We have an experienced management team with over 50 years experience in capital markets and commercial real estate. We have a very strong investment track record, which we'll go through later. We have a history of and a strategy of opportunistic investing, and we have a great market opportunity that we'll discuss a little later. Let's proceed to slide 4, and we'll talk about management team and our board of directors. My previous experience has been in the capital markets business in institutional structured fixed income. I've worked for a firm which is now Bank of America and for a firm which is now Wells Fargo. Bill Elliott, the vice chairman and president of the firm, has extensive experience in the commercial real estate space. He's spent over 30 years experience in commercial real estate, having been the past president of a large regional commercial real estate firm located in Richmond with about 70 employees. They operated as a full service firm from property management to investment sales, et cetera, as well as asset management. Now we're going to go to our board of directors. We have 5 independent members of the board. Neil Farmer is a commercial real estate developer in Richmond. Charles Polk is a tenant rep for Jones Lang LaSalle. He's a managing director for them, and he runs the Jones Lang LaSalle office in Richmond. Chuck Pearson is a CPA and owns his own accounting firm. It's a large regional accounting firm focused on commercial real estate, and Chuck is the head of our audit committee. Mark Mullenix has had over 33 years experience working for the Federal Reserve Bank in different regions of the country. He was most recently interim president of the Federal Reserve Bank here in Richmond. As a result, he spent 2 years on the FOMC. Diana Radel owns her own brokerage firm in New York City. She raises money for private transactions. Since inception in 2007, she has raised over $5 billion for private transactions around the world. All of these people bring a lot of talent and support to our efforts as a public company. Let's go to slide 5, discuss the company overview. Mellis Properties was founded in 2002 by Bill Elliott. I joined the firm as an equal partner in 2003. Since inception, Medalist has sourced and managed properties with a total asset value of approximately $200 million. We are backed up on a daily basis by Dotson Companies. Dotson Companies is our non-hotel property manager. They have 100 full-time employees. They provide daily maintenance. They oversee tenant improvement projects, capital projects, and they provide monthly accounting at the property level, which we then download into our own accounting system. Marshall Hotels and Resorts has similar services to the Dotson Companies. They have 35 full-time employees. We provide daily maintenance, monthly accounting, etc. We have worked with these firms for the Dotson Companies we've worked with since inception in 2003, and Marshall Hotels and Resorts has been our hotel property manager since 2012. Slide 6 really discusses our core philosophies and investment strategies. The takeaway from this slide is that objectives of Medalist REIT are to create current cash flow with capital appreciation. The next slide is very important. Slide 7 is a map of the Southeast. There's a reason we invest in the Southeast. We want to know our markets that we're investing in. Because Bill and I grew up in Richmond and our families have long histories here, we have the advantage of knowing the area. In addition to that, we both went to SEC schools. I went to the University of Georgia. Bill went to Auburn University. So we have classmates scattered around the Southeast that provide us good information in local color. In addition to that, Bill has partners that he developed over the years in the commercial real estate space that are also sprinkled around the Southeast, provide us good local color and information on the properties that we're considering purchasing. Slide 8 is a summary of our acquisition process and our due diligence process. These 7 items are illustrative of what we do when we purchase a property, but we also provide additional due diligence along the way before we settle on a property for the portfolio. Number 9, we have a track record. Starting with Medalist Fund 1, it's the first managed fund that we started back in 2013. We raised approximately $15 million for the fund and bought 3 properties. We paid out an 8% annualized cash distribution each quarter since inception. We finally liquidated that fund. The last property sold in January of 2018. The fund, after liquidation, the investors realized approximately 13% overall internal rate of return on their investment. Medalist Fund 2 was started in 2015. That fund is still there. We only raised about $6 million in that fund. We own 2 properties, and we paid out a 7.5% annualized cash distribution since the first quarter of 2016, and we plan to pay a dividend or distribution for the fourth quarter of 2019 to our investors this month. Medalist Diversified REIT, we have raised approximately $35 million in equity from high net worth, small institutions, and retail investors. We paid a quarterly dividend to our investors since December 2018. Currently own 368,000 square feet of retail, 66,000 square feet of flex industrial, and 273 rooms comprised of 2 hotels. Let's go to slide 10. Well, I think everyone knows the benefits of a public REIT. Transparency, liquidity, and dividends, since we're required to pay 90% of our taxable income out to investors to retain our REIT status. Now we're going to go through the asset overview and Medalist Diversified REIT's current properties. First property featured is Franklin Square, located in Gastonia, North Carolina. Has 134,000 square feet, is a retail property, has a diverse tenant base. Current occupancy is 92.5%. Total purchase price at closing was $20,500,000. We had a going-in cap rate of 8.8%. Second property featured is a hotel located in Greensboro, North Carolina. It's a Hampton Inn near the airport in Greensboro. We purchased that at a going-in cap rate of 7.6%. The property has just been fully renovated. The renovation was finalized in July. And as a result of that, we expect gross income to increase by 10% year over year. The third property is a shopping center in Mechanicsville, Virginia, which is 6 miles north of Richmond. It's located in a very user-friendly area, a lot of rooftops around. The square footage is 73,440. We purchased it at an going-in cap rate of 8.4%. Current occupancy is 97%. Ashley Plaza is located in Goldsboro, North Carolina. 160,000 square foot shopping center. In-place occupancy is 98%, and the going-in cap rate there was 8%. All these properties, with the exception of the 2 hotels, are cash flowing above 10% as a result of leverage that we placed on the properties in using the high going-in cap rates. It allows for a double-digit cash return for our investors. Page 16, Best Western Plus Hotel located in Clemson, South Carolina. It's an ideal location, less than a mile from campus. It has 148 rooms. We believe we bought this property at a very attractive level. We paid $9,750,000 for this property in September, and we paid $65,000 per room, which is very low compared to similar properties trading at $100,000 per room in the area. The last property featured is Brookfield Center, located in Greenville, South Carolina. It's 66,000 square feet of flex industrial space. Current occupancy rate is 100%, and the going-in cap rate is 7.89%. We purchased this property on October 3rd of this year. So let's just go over the investment highlights and summarize. We've got an experienced management team with complementary management skills, a very strong board of directors. We have a strong investment track record. We have a strategy of opportunistic investing. And we have a great market opportunity. We're buying properties in an area of the Southeast in the secondary and tertiary markets where cap rates are 7 to 9% versus cities like Washington, D.C. and New York and other gateway cities where cap rates are 4 to 4.5%. So we are experiencing great value in our market area. We are not competing with institutional buyers on a regular basis. And we hope that you will consider making an investment in our company. Thank you for taking your time today, and I am open for any questions.
We're speaking with CEO Tim Messier, and ticker symbol again is MDRR on the NASDAQ. What are the outlook for the dividend going forward?
Well, we reduced the dividend on advice from our investment banker to bring it more in line where we could cover the dividend realistically. So we made that decision last year, and not that we can't increase the dividend at some point, but we wanted to bring it more in line.
Very good. Thank you. And our next question, you announced a successful capital raise yesterday. What are the plans for the deployment of that capital?
Well, we were doing several things. When we bought the 3 properties back in the fourth quarter, the 3 additional properties, we drew down some lines of credit in order to do that. So that this money largely will be spent paying those down and investing in the properties that we bought last quarter. So the money will be invested in properties. We have some other payments to be made, but largely invested in properties.
Very good. And our next question, that kind of segues right into our next question. This investor would like to know what the timeline is for potentially announcing any additional property acquisitions.
Well, there is a lot I can tell you. After a lot of research and discussions with investment bankers, the bottom line is we need to be in the market every 90 days, raising money in a non-dilutive way to purchase properties, to create more cash flow, to be accretive to the REIT, to make the stock more valuable. REITs don't just sit there and not grow. We are going to grow. We expect to be in the market every 90 days, raising some sort of equity-like capital to buy properties. We doubled the size of our portfolio in the fourth quarter. I'd like to think that we could do the same this year or better. And the more properties we buy, the more cash flow we create, the more valuable it is to equity investors.
Very good. Thank you, Tim. And this question is also a little bit related to what we were just talking about. Can you talk a little bit about the potential mix of properties that are on your radar right now, whether they be in the hotels like you've acquired or retail properties, or can you just talk a little bit about maybe some of the things that you're looking at?
Well, sure. We remain a diverse investor. We purchase multifamily, limited service hotels, neighborhood retail, and industrial flex industrial properties. And by the way, anyone on the phone that doesn't know flex industrial, it's office warehouse combinations where every unit has a loading dock on the back. So it could be all office, it could be office warehouse, it could be all warehouse. So ergo the term industrial flex. So we remain a diverse investor. We want to even it up. We'd like to smooth out the percentage of ownership in each type of property. Multifamily is a challenge right now because cap rates are really low in multifamily properties. But there is a strategy where you can increase the value of a multifamily property pretty quickly. And we're looking at those strategies as we go forward. But suffice it to say, we want to even up our percentage ownership in each property type.
Very good. Thank you, Tim. And this next question, they would like to know if you could talk a little bit about how you're sourcing these potential deals.
Oh, we have great source for properties. As I've said on the webinar, we're from Richmond, Virginia, so we know a lot of people. Bill Elliott spent over 30 years in the commercial real estate business, past president of a huge regional full-service commercial real estate firm. He developed partners throughout the Southeast. As a result of that, we also have classmates in the Southeast having gone to SEC schools. But we see properties every day. We have a pipeline that is huge. It's just a matter of obtaining equity-like capital to invest in those properties. There are tons of value properties out there. We're in the Southeast in secondary and tertiary markets where we're seeing cap rates of 7 to 9% at historically high levels compared to gateway cities where cap rates are 4.5%, like D.C., New York, Chicago, L.A., etc. So we got a lot of value in our area. We're looking at properties from $5 to $30 million in value. We're not being chased by institutional investors. It's just obtaining the equity-like capital that's a challenge.
Very good. Thank you, Tim. And our next question, you mentioned earlier that you may be going to the market as much as a quarterly basis for additional capital, and that would be hopefully non-dilutive. Can you expand a little bit more on the strategy there?
Well, I mean, we could go through lines of credit. We can go through preferred equity. We could go through baby bonds. All those are non-dilutive to the stockholders. Look, our stock is way undervalued. I'll be the first to tell you that. We have our earnings coming out in about 2.5 weeks. Let the street decide where the stock should be. But I think, personally, as a stockholder, we are incredibly undervalued on the common stock.
With RedChip here, we would definitely agree with you on that, Tim. And looks like that was our last question from the audience, actually. I guess just in summary, I mean, we've covered a lot of ground here. What's the key takeaway for investors? I mean, I think you actually just touched on this in the last comment, but why should they take an interest in Medalist today?
You know, I've been in so many meetings in the last couple of years talking about our business, and I think it's starting to resonate. We are buying properties, Southeast, where cap rates are higher, where yields on properties are higher than they are anywhere else in the country. We have people from California, from New York, from Chicago, all over the country investing with us because they can't find the same value anywhere. We are thinly traded, I'll admit it. A lot of our equity is closely held by our legacy investors, but it's undervalued. And our fundamentals are good. The properties are cash flowing. When you take a property where you've got a cap rate of 8% and you obtain debt at 3 3/4 for 10 years on a fixed rate basis, that property is going to cash flow over 10%. And that's not going to be a common issue with us. We are seeing most of our properties in the portfolio cash flowing over 10%. So people ought to take a new look at us, take a look at our earnings in 2.5 weeks. I think they'll be pleased. We'll see.
Very good, Tim. We definitely agree here at RedChip, and I want to thank you for sharing more about the Medalist story. For our viewers, again, this is Medalist Diversified REIT, and we're speaking with CEO Tim Messier, and ticker symbol again is MDRR on the NASDAQ. Should anyone have any further questions that we didn't get to here today that you come up with later, please just reach out to us here at RedChip, and we'll make sure that we get those questions answered for you. And with that, I want to thank everyone for joining us today.
Thanks, everyone.